the compounded effect of both of those changes. That's what allows this kind of growth. And again, I think using pretty conservative assumptions for everything we've done so far. Okay. Let's take a look at the next page and look at how the gross margins change. We looked at this for NVIDIA. And for a Tesla, it's a more meaningful impact. If you recall, NVIDIA's gross margins were already above 50%. In
Right.
Tesla's case, they're less than 20.
That's my point. Yeah.
But I think they'll go above 60 at some point. And then the
Eh,
net profit margin,
Yeah.
approaching 50%. The green
Yeah.
line. Yep. And it'll happen, kind of smoothly and gradually each quarter as the Robotaxi and Optimus kick in, because the extra profits there will just bump up the overall profitability of the company. Now, of course, there'll be some lumps. It won't be the smooth line that I've graphed here. There'll be some bumps along the way, but generally that's the direction that we're headed. Okay. And then taking a look at the different business lines, again, just to emphasize the point.
This is a great chart. Okay.
Right, we've got
This is a really great
autos
chart.
in blue,
Yeah.
and I think auto margins are we're going to cover a little bit and then just stay flat. That's the dark blue line. We've got energy, which are already higher than auto. I've got them, coming down a bit and then gradually rising a little bit up to about 25%
I mean, 30% was
or
the
30%.
guidance. 30% was the guidance that Tesla
Yeah.
gave in about energy profit. So this is fair.
Yeah. And again, that would include the auto bidder software revenue, which should be pretty high margin. So that may be low. And then services and other in red. It's a fairly low margin business. We know they're not running that to maximize profit right now, but I think eventually the margins will grow a little bit, and you can see the modest growth I have there. But the two businesses then that really contribute to the margin growth are Robotaxi in light blue and Optimus in yellow. And of course, those two can't even compete against the red credit profit margin, which I have here at about
100%.
99%. Yeah,
Sure.
that's the best business they have going, but there's a limit on how big that business can be.
Yeah. Yeah. It's
Yeah.
margins. Yeah. Okay.
Okay. So that's a pretty nice diversified portfolio of, of profit margin potential for Tesla, with the two biggest potential businesses also having the two highest margin
There,
opportunities.
that's the point, isn't it?
Yeah.
That's the point right there. It's like the two biggest markets that Tesla's now about to enter are also happens to be the two biggest margins, and it's yearly. You're going away from this one-time
Right.
vehicle hardware sale, making $5,000 to $7,000 per vehicle one time, and you're done. Now moving to this every single year, either Robotaxi you're making 30,000 or 50,000 per year, or robots you're making 50,000, 100,000 per year every year.
Yeah. Yeah. It's a recurring high margin, high growth business. Wall Street loves that kind of business.
I was talking to Larry Goldberg yesterday, and we talked about Apple and iPhones and whether or not Robotaxi is Tesla's iPhone moment. And then, but my wife was saying to me, well, iPhone, of course, it's like billions of phones. Every single human needed to get one. And then they switched to services and the monthly subscription of Apple Music, Apple TV, the app stores. But what about, I like to compare that to, let's say, Robotaxi. Like how much, how different are they as a business? Is it equal to the iPhone massive market, like Tesla's Apple, what ended up happening to them, becoming $3-4 trillion market cap because what they did with it? Or is it like a small compared to the iPhone, the cellular phone market,
How much do you spend a year on your phone and related services?
So a lot more now than I did 2 years ago, right? So before
Yeah.
I would buy a phone, $1,000.
Yep.
Let's give them 60, 70% margin there. Let's say they got $700. I don't know what it is.